My whole mindset is like, you got to win the money game as quickly as possible so that you can go now explore your passions. You can be philanthropic. You can help other people. You can explore other things. Money is like the biggest cause of stress in people's lives. If you can win that game, life's not going to be perfect, but a lot of those stresses can be a lot easier. If you can solve that game, it helps in a lot of ways. It doesn't solve every problem, but it helps in a lot of ways.
In this episode, I talk with Bridger Pennington. Bridger is a serial entrepreneur and founder of multiple investment funds that have done over 200 deals in the last 4 years. Through his company Fund Launch, he has coached thousands of investors and entrepreneurs how to start their first fund. We discuss how he became an authority figure in the fund space at such a young age, what to consider before starting your first fund, what that process actually looks like getting started, and common mistakes that you need to avoid when you start your first fund. I hope you enjoy. Now to the show. How's it going, Bridger?
Good, Chris. Happy to be on, dude. It's going to be a fun call.
Really excited to have you on. I know you're super busy and you've got a ton of great content out there. I've enjoyed it, and I know a lot of folks do. It's a very niche topic, like what you're in, and that's funds and fund management, starting funds, and coaching fund managers. How did you find yourself in the fund management or investment fund space?
Yeah, I'll give you the short version. We can go more if you want, but I started 6 different businesses in college. I was super ambitious. I got into university and I was just trying everything. I actually wholesaled 2 houses. For your audience that does wholesaling, I wholesaled 2 houses. I built websites for people. I built a Chinese tutoring business. I was doing all these different businesses, literally and those weren't business ideas. These were actual 6 businesses that were up and running, doing business. And finally, long story short, I don't know. Do you want the full story or long story?
Go for it. Because and to add context for your end, you definitely more aggressive than I was, but I flipped 4 houses in college.
Nice.
And I mean, I was coming up with all these business ideas. The internet was still really, really, really new. So, and the entrepreneurial thing, it's kind of sexy now, but back then, at least when I was in college, it was very early.
It wasn't as cool. Yeah.
No, it definitely wasn't as cool.
Well, actually, it was funny is during that time period, I thought it was cool to wear that as a badge of honor. I've started I'm running 2 businesses right now or 3 businesses at the same time, because some of these were overlapping each other, because I had I was doing real estate on one thing and then other business on the other, and I finally realized that's and I kind of wore it as a badge of honor. When I'd go on a date with a girl and I'd bring it up because it's cool to be an entrepreneur in our day and age. And so and in reality, that's the worst thing you could do is launch 3 businesses at once. It's so stupid. It's the dumbest thing. And I thought it was cool in college, and it was dude, you're an idiot. No one successfully launches 3 businesses at the same time, ever, why are you saying I remember I was dating this girl and I told her dad, oh yeah, I'm running 3 businesses right now in college. And I thought it was so cool. And I'm man, I'm such an idiot. But anyways, I digress. So I'm in college and I'm doing this. My dad finally grabs me and he's like, Bridger, you're kind of like a chicken with your head. Excuse me. A chicken with your head cut off. I want you to go meet with my business partner. This guy can really help you out. And I said, okay, I'll go meet with this guy. And by the way, I grew up in a pretty normal household, nothing crazy. My dad drove an old car. I knew he was an entrepreneur. We kind of had the ups and downs of being an entrepreneur family, and that was it. Anyways, I drive to this guy's house. I pull up to my dad's business partner's house, and it's this gorgeous, beautiful home. It's this white house that encompasses a cul-de-sac. It's amazing. And I come and I get out of my car, I go knock on the door, and I'm I'm a little nervous, And I'm who is this guy? Is a butler going to come in, be gone, peasant, get out of here, kind of a thing, And so I knock on the door, and thankfully he comes to the door. He goes, Bridger, come on in. I come to this guy's house, and it's gorgeous. He's got the grand piano, the wine cellar, the basketball court in the basement, the cars, the pool, everything, And I'm whoa. And I come and sit down, and long story short, we start to chat, but I finally ask him, how did you get all of this? What did you do? How did you do this? And he goes, Bridger, funny enough, not a lot of people ask me that question. And I was kind of taken back. I was oh shoot, that's the first question I had when I came in here. And he goes, no, it's okay. I'm totally willing to tell you, which is actually a good lesson itself. I think a lot of wealthy people are actually very willing. They actually want to share and empower the next generation of entrepreneurs. Not a lot of people ask them. Not a lot of people. And I'm not talking people that already have shows online. I'm talking just private individuals that are rich A lot of them actually love to mentor college students or young entrepreneurs, and
I actually
anyways,
find the wealthier they are, the more willing they're able to give, or the more willing the more they are willing to share.
100%, because what else is there to life? Like, they've already won the money game, and they get so much, and I now get to hang out with a lot of these people. They get so much satisfaction in helping kind of their younger self, like they see if you can show up to a big rich person and they can see a little bit of themselves in you, man, you'd be surprised how much they open the floodgates of partnerships, connections, whatever you need, because I want to help you out. I've seen it across board. It's actually really cool. But you've got to prove that you've got the ambition, the drive, just like they did back when they were younger, just like you. And anyways, so besides the point, I asked him, what did you do? And he says, he goes, I was a lot like you in my 20s. He goes, I ran a bunch of business. He goes, I actually had moderate success. I just did really well. Then I figured out the secrets of the ultra wealthy. He goes, the ultra wealthy families of the world, the Vanderbilts, the Trumps, the Romneys, whatever family you want to point out, a lot of them run investment funds, or they have their kids. They get their kids into the best universities. They want them to go work in the fund world, private equity, hedge funds, venture capital, or come back home and run the family office. And he goes, I met a guy a couple years ago that ran a private equity fund. He was one of the wealthiest individuals I'd ever met in my entire life. And he said, I didn't care how long it took me. I don't care if it took me 1 year, 5 years, or 20 years. I was going to figure out what a fund was, how to start one, and how to scale one. And he goes, that's what we did. And he goes, we started a real estate fund. At the time, they were managing over $8 billion. Jeez. Billion with a B, $8 billion of mostly multifamily real estate, which is bonkers, right? That's twice as big as Cardone Capital is today, right? To just put it in perspective, like Grant Cardone. Today, they are over $40 billion. So they're 10 times bigger than Cardone Capital. They're 10x Uncle G. And nothing against Uncle G. I like Uncle G, but it's just kind of put it in perspective.
It's a good frame of reference. Yeah.
It's it's like, whoa, those guys are massive. I think they're top 10 in the world, real estate companies. Anyways, crazy. So I was sitting in this guy's room. I was like, dude, this is amazing. I'm sold. I'm sold on funds. I want to do a fund. I want to figure out this game of funds. And I said, can you mentor me? I'd love to have you coach me. I'll come early to your house. I'll get you coffee. I'll do whatever you need. Like, I'll drive you. Like, what, dude, I'm yours. Like, just teach me, And he said, Bridger, go talk to your dad. Your dad knows way more about us than I do. And I said, no. We live in a kind of a smaller house. He drives a crappy car. Like, I want to learn from you, dude. And he's like, Bridger, sorry to break it to you, but me and your dad make about the same amount of money. And my chin dropped to the floor. I was like, huh? What? Like, come again? He's like, yeah, we're pretty much equal business partners on this business. And anyways, long story short, I left this dude's house. I ran straight to my dad's house. I was like, Dad, what the heck? Like, what's going on? Like, why haven't I been able to order a soda at like the restaurant for the past 10 years because it's too expensive, and we're saving money on this little trip or on gas or whatever here. And yet you're running a multi-billion-dollar investment fund. Like, where's the disconnect, And anyways, he kind of laughed and smiled. So I'm going too long here. Feel free to cut me off. But I said, Dad, will you teach me? And so for the next, 6 months to a year, I went over to his house every single Sunday night, and we'd sit down on the whiteboard and he would teach me about funds, how they're put together, what they even are. How do you run a private placement? What's a 506B, 506C, Reg A funds, 3C1, 3C5 funds, 3C7 funds? Like, what are all these things mean, and actually how to start a fund, how to run one, how to scale one. And it was pretty, it was a PhD degree I got just on a whiteboard, which was pretty cool. And so, sorry, I'm going too long here, but the thing about life is when you start to learn about something, you start to recognize that thing in your life. Like the old Tony Robbins talks about that, all that kind of stuff. And so I started to learn about funds, and I started to recognize opportunities around me where a fund could solve a lot of problems. And not a lot of people think like that. And anyways, so I'm in college right now. I'm actually also working a job and trying to run a business that I'm starting, because I wasn't getting money from my parents, So I'm at this job, and I had this idea that I could start a fund inside of the job. It was pretty cool. They needed financing for their clients that were coming through. I talked to the owners of the business. I'm like, hey, can we do this? And they're like, yeah, this actually be really cool. So by the way, I'm 22 years old at the time, so I'm still in school. These guys love the idea. I went and pitched my dad. My dad loved the idea. We put together this whole fund, and I was so excited. I was going to run a fund in college and do this thing. And so I get it all together. I work really hard for 2 or 3 months, get it all set up. And finally I'm like ready to launch. And I'm like, okay, I'm ready to launch. Here we go. And then I go, crap, now I got to raise money. Like I kind of
Now you actually have to work.
Yeah. Like for whatever reason, I overlooked that part. I was like, I just thought it'd be so easy. Like, oh, I'm just going to raise money. I'll put it together. Like, this is it. And then I was like, crap, like who's going to invest in me? Like I've got no experience. I'm not a college graduate. I've never done this before. I'm young. I'm inexperienced. Like who would ever write me a check? And then I thought, aha, my dad. Like easy, dude. Like, or this other mentor guy too. Like easy. These guys believe in me. I'm like the younger self. Like I'm like, they'll totally invest in me. So I remember I went to my dad's house and it was on a Sunday night and I got my little pitch deck and everything. I said, Dad, how would you like to be our first investor into our fund? And my dad kind of smiled and he said, Bridger, I have the money to invest, but if I invest in your fund, I would ruin the experience of you raising money on your own. And he said, no, he said, this will be a crutch that you'll never be able to cover from. And you need to go raise money on your own. And he kind of kicked me out. He said, you got to go do this. And I kind of walked out with my tail between my legs a little bit. And I said, you know what? I'm going to take you up on the offer. And I went out and I talked to everybody I knew. I talked to former bosses, college professors, family friend, like whoever it was. And I raised a whopping $49,500 from, I think, 7 different investors. So like average check size was like $7,000, I think, like so small, like teeny, but it was enough to get started. And we started this little micro syndication fund. We were doing these short-term loans to these clients that were coming through. The loans would last like 2 months. And we got a really good return. Our first group of investors, we got them a 64% return on their money, which was incredible. We then closed that first little syndicate. We launched another fund that was more official. We raised and deployed millions of dollars out of that fund. Like I got it way more legit. We had kind of a small track record. I ran that fund for about 3.5 years. I think our annual cash on cash return was 60. So the first one was 64. Next one was 62, 49, and 36% cash on cash return to investors, which is amazing. I then had a competitor come and buy us out. So we actually bought our whole business, which is so cool. So I had a great exit on my fund. And then during that time period, and then I'm sorry, just to finish that up. That was about 1.5 years ago. I recently just launched another fund, a hedge fund with a different partner in crypto. We just raised $10 million in our initial launch. We launched last year, probably the worst time to launch a crypto fund. And we've actually performed really well. It's been amazing. It's called the Ugly Unicorn Crypto Fund. It's done really well. So during that whole time period, sorry to summarize, and we can take this back somewhere else. But thank you, Chris, for letting me go on.
Yeah. There's a lot to unpack there, and I love that story with your dad. I kind of related a little bit. Well, actually, before I go there, I got a chance to talk with him at your event last year in Vegas, and hear his side of that story, just his perspective, and it was very interesting to hear that. And basically, the way I summarized the way he was playing that game was, it was, he was almost living like that immigrant lifestyle, and he was very clear. Like, I mean, no one went without want. I mean, you had a nice life, but I mean, you didn't live and he didn't live like he was ultra wealthy. But ultimately, that it was that ability probably that allowed him to compound returns over time, because at the end of the day, like, does a Porsche really, like, well, what is having multiple hot rod cars or a huge house, what is that really going to do for you? So that was very interesting. The other thing is,
I'll say that my dad, he has compounded very well. He's a really good investor. And
it's really Warren Buffett. I mean, if you look at that, like,
yeah, it really is that. And he talks to me. He's retired now, but he just does like trading for fun. He kills it in trading. He always, I'm like, Dad, what's your stock picks for the next 6 months? Like, I always get like, I'm like, what are you doing? You know, because I want to copy. He really is a good investor. And now I'll say this to just benefit my dad though. Now that his kids are all out of the house and everything, I mean, he has a huge home now. He's just bought 2 more homes that he's living in. He's buying all sorts of toys and other stuff now, after his kids are out of the house, which I thought was really interesting. And kind of, I had a guy on my show actually yesterday or 2 days ago, super wealthy dude. He's worth probably $500 million. And he's like, I used to have like a private jet and helicopters and cars. And he goes, I saw it affecting the way my kids lived life.
Mm-hmm.
And he said to me, optics are very important. And he goes, right now I sold my jet. I drive a Yukon Denali, pretty standard SUV. And when I fly business, I fly private. My kids never fly private. My kids never, because They can come on vacations with me, but they get a total. They all know they get a total of $0 when I die. They've got to earn it on their own, which I thought was kind of cool. We can talk more about that in a minute, but my dad kind of did the same thing, which is, I think, pretty cool.
Yeah. And so my grandfather, I remember whenever he built a business, like 300 plus employees, and he was old school. Though walking to school uphill both ways, working 18-hour days and on top of school and all this other stuff. And I remember going to him when I was going to invest in real estate, and he definitely had the money. But he said no. When you were saying how your dad said that, and then you mentioned the crutch, it's very true. Is had he given me the money, then he would have been my single source. And ultimately, when he said no, I had to go figure out how to raise money to buy these houses. I had to figure out what is the mortgage industry, what do they look for, and it was a very educational. It was stressful. Wouldn't say I really enjoyed that particular moment, but at the end of the day, it taught me so many more things, and I now don't have that crutch. And now my grandfather did end up investing in one rental property, but it wasn't my first one. It was my third deal. And that was the one and only one he did. It was the only deal that out of the 200 that we've done that he helped me out with. But it's definitely important to learn and get that experience.
Well, your first investor is your hardest investor you'll ever find. Mm-hmm. And I think back to that crutch concept, if your first investor was your grandpa, in the back of your brain, I think, or my brain, I think we would sit there and go, even if you had success, you'd go, well, it's only because my grandpa or my dad was my first investor.
Yeah. And right? Questioning, could you have done it without
I think that would eat you alive. It would eat your confidence, kind of nibble at you in the back. And I think it's a big disservice that a lot of well-intended family members do to other family members is prop them up or help them. And even if they have success, it'll still hurt their confidence. If they have negative, if they lose the money, it strains the relationship a lot and hurts their confidence even more. So I don't know. I think it's pretty wise not to do that. So
yeah. I don't know. Something else I want to go in. So you started your first fund at 22. I looked up these stats before. The average age of a fund manager, 71% are over 40 years old. 95% are over 30 years old. So I'm not sure where it breaks down before. You're probably in the less than 1% that we're starting funds. So what did your friends think when you're now? I mean, you're already very unique being entrepreneurial, but now you're going to go out and start a fund. Like, what did your friends think about that?
Well, friends and other people as well. A lot of people just don't believe in you or just think you're crazy, right? Just like this young kid, which is partially true. Like, man, who do you think you are to go manage money and stuff? And I said, I don't think of myself that great. I'm not trying to, I just know I have one little niche, these little loans that we're doing that are really good. I don't know the stock market. I don't know all this other stuff. I know my little game right here. And we have asymmetrical risk versus return. We have relatively low risk for high return. And so when talking to like investors would always ask me that same question. I was like, dude, I don't know everything. I don't know real estate. I don't know other stuff, but I do know the little thing we're doing and it makes money, And so that's the angle I went about it. My friends still to this day, I don't think have any clue what I do with my life. Even now, like, I don't think they get it. I really don't. I honestly don't. And I don't say that like condescendingly, like it's actually really interesting. I'm online now, and now just so you guys are aware, I now teach funds as well. So I run a fund. We also have 36,000 people that are in our community and course and all that kind of stuff. And it's funny. I have a bunch of friends a ton of friends from high school and college. A great friend group and all that kind of stuff. And it's really funny. When we hang out or get together, I get asked about my business about, I don't know, 5% of the time. Like, people just never ask me about my business, which I don't know. Which is totally fine. It's like, let's just talk about their stuff. And I don't know, because I'm online so much or I talk so much about it. They're just like, I don't want to hear about it. Or some people just don't get it or they don't care or whatever. I'm like, cool. No hard feelings. We're good. I rarely get asked about my businesses from my friends, like, ever. And so I almost in the back of my brain, I'm like, maybe they just, whatever. I don't know why that is, but it's interesting.
Well, yeah, when I was in college, and I was ridiculously entrepreneurial, I just get that from my grandfather. But when I would explain that to, and it wasn't cool, it's cool now, but still, it's not for everyone. Back then, it wasn't quite as cool. And I say back then, this is, I graduated in '05, so it wasn't really that long ago. But whenever I would explain what I was doing, it was just like deer in the headlights. Like they were clearly there to get an education and get a job. And there's absolutely nothing wrong with that. Yeah. I think I was a little too aggressive and probably burned some relationships or just maybe not burned relationships, but definitely kind of soured some by being very aggressive in talking about, well, this is why you should have a business and being independent, this, that, and the other, when it's really not for everyone. So when you talk about how most folks they just don't even ask you questions and it's really not in their interest graph, like that's kind of okay.
Yeah. And it's like, people are just different. People aren't wired like us to like run businesses. I've invited most of and I'm kind of talking my friends from high school and college. I still have a great group of friends. I've invited almost all of them to like do business with me. Let's do something together. Like, let's do, and like, let's like, I'll like already have connections in there. And a lot of them are just like, I'm good. Like, I'm all right. Like I just want to go to school and get my thing. And I'm like, okay. Like, I just don't understand that mindset at all. I don't get it. And they don't get me. Because I just don't get like, I'm going to go work for the next 40 years, work up the chain, I guess, not think about money. Like, I don't know. My whole mindset is like, you got to win the money game as quickly as possible so that you can go now explore your passions. You can be philanthropic. You can help other people. You can explore other things. If you can win the money game, money's the number one cause of divorce, to like all these other things. Money is like the biggest cause of stress in people's lives. If you can win that game, life's not going to be perfect, but a lot of those stretches can be a lot easier, right? And if you can win it quickly and condense maybe decades down to years and years down to months, you can, move a lot faster and not have to worry about the biggest thing that people struggle with and get divorced over and commit suicide over. And you know what I mean? If you can solve that game, it helps in a lot of ways. It doesn't solve every problem, but it helps in a lot of ways. And so that's my mindset. And I'm like,
I think you'll find once that group starts getting into their 30s, because at that point, families are usually involved, possibly kids, and then just a little maturity in their business and or not their business, but their career priorities change, and they'll come back around. It's like, hey, I've got X amount in my IRA. What can you do with it?
Well, and it's funny. I love that thought. It's people that hit I think about their mid 30s, whatever that time is, they go, crap. I think that's why there's the midlife crisis is a real thing, is because people go, I should have taken the money route a way different way. Because it doesn't usually the first year, 2 years, or 3 years, you don't see the separation of individuals like from your class or your grade or whatever it is, but you do see it in a decade. And then a decade later, you go, man, interesting. I was right there. I was right next to that person. I just decided not to just follow that path. I went a different path, and I'm in a way different place now. And I think a lot of people, and it's kind of sad. I wish it wouldn't be that way, but a lot of people wake up and say, shoot, I wish I would have been more attentive to the money game. But now they're in a way riskier state. They've got maybe a mortgage. They've got a kid or two. They've got responsibilities. And now the risk level is way higher than if they were 22 years old.
Yep.
I had a great mentor. This actually changed my life. I remember I was talking to him, and this guy, he was I only met him one time in my life. This guy he was from Harvard, came and spoke at our university about business, entrepreneurship. He gave this great speech. I was listening in the back. He then finished. He came to the back of the room just to watch the next speaker. And I was like, dude, he's right there. I'm gonna go talk to him. So I went up to this guy and I was like, hey, my name is Bridger. I've started a bunch of little businesses. I'm thinking about doing a kind of risky business venture. I think this was about my fund, by the way. I can't remember which business, but I thought it was my fund. I said, I'm thinking about doing a risky business venture. What's your thoughts though? Should I just go and because I had a really good GPA in college. I had an offer to go work at a huge firm out in Silicon Valley, like a 6-figure offer. And I was like, that's kind of the safe route. Or I could go after kind of my dreams and launch a business. And he goes, I'm like, what, would you take what's your thought on risk? And he's like, he kind of paused me. He said, what are you talking about? And I'm like, well, yeah, it's kind of risky to go start a business and do all this. He was like, dude, hold on. He goes, if you start this business and you fail, let's say it fails, you lose your money, whatever, it goes to zero. He goes, do you have a parent or a grandparent or a cousin that you could move in with for 3 or 4 or 5 months, and they would, you could sleep there, and you could eat and stuff. And I was like, yeah, honestly, I could probably move in with somebody. Like, I have good, and he goes, could you probably get a job at, whatever, making $15 to $17 an hour right now and do that? And I was like, well, yeah, like that's kind of like the new minimum wage, right? Or at least where I live. And he goes, you don't understand risk. Your worst case scenario, you get to move in with someone who loves you. You got food in the fridge, you got heater, air conditioning, and you can get a job that pays you almost $20 an hour, driving a truck that you can pay all your bills within a month. He goes, that's better than 90% of the world lives.
Yep.
You have no idea what risk is. And I was like, huh. He goes, I would go after your dreams. And guess what? University is always here. There's always job offers. And people love hiring entrepreneurs that have like gone after something. He goes, dude, and right now you don't have a big mortgage. You don't have kids. He goes, it's way riskier for me in my state to make a risk. Cause if I risk it and lose it, man, I lose hundreds of millions of dollars. I have hundreds of employees that now don't have money. I have family, kids. He goes, if you lose it all, you lose what? 10 grand. And like, you can make that back in 3 months working at McDonald's. Like, you don't understand risk. And I was like, whoa. Anyway, sorry, I'm going too long, but that changed my life.
No,
I was like,
I've heard that from other folks. Yeah. I mean, Gary Vee's talked about that too, where it's like in your early 20s, that's the time to take risk because you have time and you don't have as much responsibility typically.
Yeah.
Moving over into the fund space. So you work with a lot of fund managers or aspiring fund managers, folks that are considering starting a fund. What do you generally recommend folks consider before they ever start a fund? Like, what do they really need to think about?
Yeah, it's a great question, actually. Number one, when people are considering, I tell them, get a ton of education around funds. Come learn the game first. It's like trying to decide, like, should I go play rugby? It's like, well, you probably should just learn the rules of rugby first. Like, see if you even if you like the construct of the game. You know what I mean? So come learn the game is what I tell people first. So that's why we actually provide a ton of free courses and just videos on YouTube just to teach the game. So you can understand where the rules, the lines are. But once you're in the game, there's tons of strategy and stuff you can put in there, which is cool. Second thing I tell all people though, do not consider this game unless you are deeply honest.
Yep.
And I really mean that. You will go to prison. If you're not deeply honest, if you don't have a something inside you that's like deeply honest, if you typically lie or screw people over or whatever, I'm telling you, it'll save you 20 years of prison. This game is not meant for people that have a propensity to lie. And even people that are honest people, they're honest until they're managing $100 million. And then, and now there's controls and stuff now, and it's a lot better than it was 20 years ago. But people would, you manage $100 million fund and mom, someone's really honest until mom gets sick and mom has cancer, and cancer treatment is $1 million overseas. And you go, well, you know what? I love mom. I got to save mom. I'm just going to borrow some money from my fund to go pay for mom's cancer treatment. And all of a sudden you committed fraud and you're going to jail, but you're justified in it, right? Like, most fraudsters don't start out as fraudsters. They start out as honest, good people like me and you, kinda. And then something happens where they just can't handle the thing. So I could talk for 2 hours on that, but if you're not deeply honest, if you can't manage, I love the parable from the Bible. If you can't manage a little bit of money or a little bit of ownership, you probably can't manage a lot of money and a lot of ownership. So how do you manage your current family office? How do you manage the current money you've been gifted or given? What do you do with that lot? And can you compound that 100 times into a fund? Those are a few things I would consider in the back of your brain before playing this game. But again, educate yourself, come in and learn all that stuff.
Yeah, the SEC is not, they don't really care if you're 22 or 62, if you've got 10 million or a billion. Like, at the end of the day, the rules are the rules, and their hammer swings just as hard regardless. Yeah. I saw a memo today that the SEC, I don't know if it was they brought charges or they actually finalized charges against some syndicators just doing what they shouldn't be doing. And it's pretty, it was a pretty common It wasn't a nuance. It was something that they should have known. Like, just I haven't been in the game that long, and I'm pretty aware of what they did was not right. But
Yeah.
that's definitely good to know. So with raising private money, I've
done
one
thing there before you go on,
ahead.
Chris.
Go ahead.
Just so it doesn't scare people away, though. The SEC, in my opinion, doesn't just come after people, though, because you read all these reports of like, man, I'm just waiting for the day the SEC is going to come whack me on the head. You know, if you're running your business right and you're honest and you're doing stuff the right way, the SEC wants you to be in business. They actually like you. They're not coming to just doom and gloom you. Most of the time, the SEC comes after people after they get complaints, just so people are aware. They get investor complaints from 3 or 4 or 5 investors to investigate a certain individual, and then they come and investigate. It's usually based on that. And usually the complaints are, hey, we've lost a ton of money. We aren't getting reports. We think this guy's lying and stealing our money. Can you go investigate? And so if you treat your investors right, if you run a good business, you're making money in your investments, life's great. It's actually a fantastic business to be in. And the rules are actually very good because it kicks out people that are fraudsters and it helps them. Their investors come to you, that's a good fund manager. So I just want to make that note. Sometimes that scares people away. And I don't think it should. If you're that type of person, it's actually the best thing in the world. So sorry, Chris, I cut you off.
Yeah, no, and that's good because the SEC provides even better framework. So I've raised 19 million over the years just for my flips. And it's usually one-on-one. Hey, I've got a flip, Bridger, I need 150,000. Once we're going to repair it and we're going to sell for 300. Boom, done. It's a note. Good to go. But at the end of the day, like, that could be bad too if I don't do what I say. If I'm not very transparent on what we're doing and I don't actually perform and actually have good communication with you. So thankfully, my parents instilled strong ethics and honesty and humility to where I was very honest with all my lenders, and even the couple of deals, because not every deal goes the way you want it. Even the couple of deals that took longer to sell or we didn't quite get the price, it was just, hey, Bridger, it's taking a little bit longer. Here's a couple of things we can do. Can refinance you out. Or if you want to extend, we'll do this, this, and this.
Yeah.
As opposed to clamming up where you see others, they get in panic mode. Then they just stop returning phone calls.
Yeah.
And then now investor, or in this case, private lender, they're nervous. And it's just when you got the SEC involved, stakes are higher. So at the end of the day, do what you say you're going to do, have clear and ongoing communication, and then just rely on your lawyers as far as drafting documents, making sure everything's structured in a way that's compliant. I actually find funds are a better way to raise money, just because there's all, like you mentioned, there's all those added protocols that you have to go through. These are hoops you have to go through, and that's to help make sure that everyone's on board.
Yeah, 100%. Couldn't agree more. Yeah, clear communication is massive with investors. Keep them in the loop. It's usually the guy, they then stop answering phone calls. Then there's, let's investigate, and then, oh man, this person's stolen money or whatever. It's anyways. We could go on and on, but yeah, no, run it the right way. Just do the right thing, and you'll be great. And that's actually the best. It's one of the best business models on planet Earth. And I don't think you should be scared of the SEC. You just do things the right way.
Yeah. So what does that process look like starting a fund?
Yeah. So we have a formula we call the fund launch formula. I'm sure you've heard of this. Being inside of our stuff, we talk about this all the time. So it's a 4-step formula to launch a fund. Now to take people back a little bit, what even is a fund, right? Like, what even is this term? All a fund is, so when we keep throwing these terms around, all a fund is just a pool of money that investors put money into that pool. And then people like me and you can draw from that pool of money and go make investments. And whenever those investments make money, they flow back to the pool of money and get split between ourselves and the investor. So for example, like you said, hey, put some money in, we're going to go flip a house. When the house makes money, we'll split the returns, right? That would be a house flipping fund or a real estate fund. So the difference then between hedge funds, private equity, venture capital, real estate funds, debt funds, the only difference, we actually launch all these types of funds. We launched 120 funds last year out of our group, which was so cool. The only difference is what they invest into. So they're all just a pool of money. A real estate fund just buys and sells real estate. A private equity fund, a pool of money, they buy and sell private ownership of businesses or private equity. So they buy restaurants, they buy casinos, they buy whatever it is, they pool it together in a fund that's privately held businesses. Hedge funds, same pool of money. Instead of buying private businesses, they buy public businesses or public securities. So stocks, bonds, options, Forex, crypto, that's a hedge fund. A debt fund, they're a pool of money. They issue debt. They issue mortgages, loans. they're actually all pretty much the same thing, which is kind of cool. So that's kind of the realm. Sorry, what was the question, Chris?
And that's actually important because I didn't know that. And when I was going knee deep into all the funds and waterfalls and all this other jazz, just trying to learn about what a fund is, and I came to that conclusion. I was like, they're the same thing. They have different nuances, but they're basically the same thing. But yeah, the question is, what does the process look like to start a fund?
Oh, gotcha. Yeah. So we teach, I love teaching what's I call the fund launch formula. It's a 4-step formula. This is the opposite of what you will read online. This is if you go, when we first started this, by the way, we were like there's no one that teaches funds online. Like you go Google, how to start a fund. Like, it's like nobody. It's like either hire a lawyer and pay them $50,000. They'll teach you. Or, there's blogs. Like, so I was reading one blog and it was like, okay, first thing, like step one. And you can tell this blog writer had no business even. They just were writing a blog, right? And they're just a writer. They're not a fund manager. They just write blogs. And they were like, step one, like hire a lawyer for 30 grand. Step two, like try to raise some money. Step three, if it doesn't work, well, shoot. But if you raise money, then you can deploy it. Like it was, anyways, I was like, man, like it's funny enough. I interview fund managers all over the world. And what's funny, I started to see this theme of how they launch their funds. And almost all of them follow this 4-step formula. And I'll go really quick through it. You guys can go watch on YouTube. I have a whole video on it. But the 4-step formula is this. Step number one, go and find incredible deals. And real estate's the best example. So go find an incredible deal. Like, hey, we found this 35-unit apartment complex in Miami. It's amazing. We're going to buy it for this cap rate. It's going to be just awesome, right? And then that deal becomes your lead investment, right? And you say, hey, and later on, you're going to say, this is a great case study. We want to go buy 18 other properties just like this over the next 2 years. But lead with an incredible deal. It's usually the best way to do this. Or a great thesis or a back-tested track record, like something like if you're a trader, like we backdated 100 years, we traded and our algorithm works for 100 years, right? So lead with a great deal. And if you don't have a great deal and you're not that person, partner with someone who does. We run a crypto fund. I am not an expert in crypto by any means. My 2 business partners are absolute phenom experts at crypto. And so what happens is we come together. I'm really good at running funds and raising capital. They're really good at crypto. We come together and we bring a great partnership. So again, number one, step one, find a great deal. Most people, after they find a great deal, they're like, okay, let's go hire the lawyers, right? Let's hire lawyers to get this thing going. I always go, hold on. Before you hire lawyers, step 2, go and frame this entire fund out, okay? Because a lawyer is a very expensive teacher. They will talk slow. They are going to be methodical. They will build you $30,000 documents. And then when you go change it, oh yeah, we'll make amendments. And they're going to charge you another $5,000 for each amendment you're going to make or change. And all of a sudden you're spending $75,000 for your documents at the end of the day. That's a pretty standard price for a fund.
And if I can interject there, because I had the framework in place. Ultimately, lawyers, they're very logical. They can only answer a question that's asked. I mean, they don't know what you don't know, and you don't know what you don't know. So the more you know what to ask, and the better they're going to be able to help you. Yeah,
exactly. For my last fund, I walked into my lawyer's office. I was like, dude, I want XYZ with a drink and a side of fries. Like I knew exactly the fund and I knew all the terms. I was like, you bill by the hour, right? Okay, bill me by the hour. Let's do this. It cost me, I think, a third of what he typically costs. I think that lawyer usually charges $30,000 for a fund. Mine was about 10 grand. Just because I knew all the stuff and it was so fast. We had it done in like 4 weeks. It's like super fast. He typically takes 12 to 18 weeks. So anyways, I digress. Step 1, find a great deal. Step 2, don't hire a lawyer yet. Go and frame that deal out. This is what I call. So frame your fund out. What's going to be your waterfall, your catch up, your carried interest, your pref? Are you going to run American waterfall, European waterfall? How are you going to structure your team, your board of advisors, all that kind of stuff? Put that into a pitch deck. And if you don't know what those mean, don't worry. I got YouTube videos and stuff to teach you all that kind of stuff, but put that all together in a pitch deck and get it ready and frame out your fund. And then step 3, go and actually pitch investors. So before you have legal done, go and float this around to potential investors, to mentors, to people in your circle, and go up to them and say like, hey, I'm thinking about doing a fund. I've got my pitch deck. Can I give me 12 minutes? Let me give you my pitch. Can you give me 3 minutes of feedback? I know you look at a lot of deals. I really respect you as a mentor or coach, whatever this person is to you. Can you give me some feedback on this fund? Would you actually invest in this? And it's going to be a Zoom call. I promise it's only 15 minutes. I'd love to talk to you, whatever the pitch is for them. And do these kind of soft pitches or kind of, pseudo pitches, and you'll get actually really good feedback. And they're either going to tell you, number one, oh, this is great, I wanted to invest, which is awesome. They also, even better, they tell you this is terrible. I wouldn't structure the deal that way. I wouldn't do my fund this way. I would, because I don't like it. And you go, well, what did you like about it? And you can go through and rebuild. So then what you'll do on that. So step one, find a great deal. 2, frame out. 3, go and pitch investors. When you get feedback, go back to step 2 or step 1 and reiterate your pitch and refine it. And this is going to save you thousands of dollars from lawyers. Go refine. Okay, maybe we're going to do a 1.5% management fee or a 2.5%, whatever. We're going to change our carried interest. We're going to change how we structure our fund. It's maybe going to be a 4-year fund instead of a 7-year fund, whatever it is. And then you're going to go back to investors and you're going to try to get verbal commitments from investors. We try to get most of our people in our group about $2 to $3 million of verbal commitments, meaning what you say is, hey, this is not a real fund. I'm just kind of testing. But if this was real, if we get this ready in the next 6 months, like, what would you actually invest this? How much would you invest? Like, what can we put you down for? Mm-hmm. And if somebody says, you know what, if this is actually real, I would put in, $500,000 or $250,000 or $100,000, whatever it is. And you go, great. I'm going to put you down as a verbal commitment. Again, you got to read the documents and stuff when it's done, but I'm going to put you down for a verbal commitment for $100,000. They say, great. And that gives you confidence and your team confidence in your pitch. Most funds never launch because they don't do this process. Anyways, I have a whole hour video on this. I'm trying to condense it. Once you get the verbal commitment, so step 1, find great deals. 2, frame it out. 3, go and pitch investors. Then and only then, step 4, do your legal. So at that point, you go, okay, we've got a bunch of verbal commitments. We're pretty solid on what we want to do our fund. Okay, Mrs. Lawyer, Mr. Lawyer, let's do our fund. Let's set up an LPA PPM. Let's do all the fun stuff. And at least in my experience, it's a lot cheaper when you have it all set up because you know exactly what you want and what's going to be done. They pump the documents out. You then go back to step 3 and you say, hey, remember, 2 months ago, you said you'd put down $100,000. Great. We actually have the documents out. I'd love to review them with you. Can we look through them? Okay. We're actually doing this deal. And then you get them to or hard sign into the fund. They're now signed investors into your fund. And ta-da, you've just raised $4 million for your fund using the fund launch formula. The last thing I'll say is most funds never launch, which is actually okay. And there's 2 reasons for not launching. One's good, one's not good. If you paid $50,000 and you built a fund that no one wants, that's a bad way to waste $50,000.
Very expensive stack of paper.
Yeah, very expensive. Yeah, stack you got there. The other way that's okay. I was going to launch 3 funds over the last 2 years. They never launched because we did step 1. We thought we had a great deal. We then did step 2. We went into step 3, and our investor pool just hated the idea. They were like, "This is," and we were like, "Oh." And then they came back, and then like we changed some stuff, and we were like, "Man, this is probably not a good fund." And we never launched. We didn't spend any dollars. We spent probably 2 weeks of time and we tested it kind of like any other business. You test your model. We tested it. We said, hey, this probably isn't a good business. Let's not do it.
Yeah. The lean startup
saved
method.
us so much headache, so much time because we followed the fund launch formula. So it's okay if it doesn't launch, just do it in the right way. So hopefully, sorry, that was super long. Hopefully that was understandable, Chris.
No, that's really good. And that probably answers, because my really last question before we close this out is, what do you see folks, what are some common mistakes you see folks either make when starting their fund or overlook in that process? And you may have just answered that, but I don't know if you have any other thoughts there.
Yeah, that was it right there. Yeah, that's the biggest mistake I see is people hire lawyers too early. Additionally, they take way too long to launch. If you're in Black Card and other people, I whenever you hop on a call with me, I'm like, okay, when's launch date? When's launch date? When's launch date? Like, when are we launching? When are we moving? When are we getting to step? I push people to get to step 3 as quickly as possible. You can get to step 3 in 2 weeks if you really push. And I want people to move. And because opportunities only last so long, your deals only last so long, there's a lot of advantage of moving quickly. Most people sit for 2 years, 5 years. Yeah, I'm going to do a fund one day. I'll think about it. I've been mulling around it.
That's what I hear with real estate investing. I want to invest in real estate one day.
Dude, yeah, it's the same thing. One day I'll do it. And it's like, well, maybe when the market's perfect and Warren Buffett calls me that day and I win the Powerball, then I'll start. It's like, that's never going to happen. The stars are never going to align for real estate or whatever it is. Like, you got to just start moving. You got to start making stuff happen. You got to start making good deals. And that's kind of my opinion. So
love it. All right. Well, there's a few questions that I ask everyone. So as we close this out, the first one, you're the youngest guest I've had on, so I'll let you take this any direction you want. If you could give advice to your 20-year-old self, what would that be?
Yeah, not too long in the recent past, but to my 20-year-old self, I think I would say, you know, it's all gonna work out. And I remember stressing really hard, and I still am a pretty ambitious person and kid, and I like to do fun stuff, but I was a pretty big hustler in college, and I went after it. And I would just tell myself I really stressed a lot, and then maybe that was to my success, I guess, or my detriment. But I really was like, if I'm not a billionaire by 30, then I'm just trash, Like that was kind of the mindset I had, and maybe I still have a little bit of that in me, but and it pushed me to work really hard and to just get great grades and have a great, just like be great and try to be in every aspect of my life. And I think I just tell myself, hey, it's gonna work out. Like you'll be all right, and keep
Is that
working.
almost like
Don't
not work hard, like do that, but also be okay with the process and slowing down, working hard and slowing down, not slowing down as in necessarily pace, but in the mental pressure.
100%. And actually, this is the advice I'm giving myself right now. I literally last night I was laying in bed and I had this kind of talk to myself. I've had in the last 3 weeks, I've had I think 3 guests on my show that are worth at least $250 million to $1 billion. A really high net worth individuals. They're awesome. They're sitting right across from me. I get to talk to them. And all 3 of these gentlemen had sold their businesses for huge numbers. And what was funny is all of them are like, dude, we're driven people. Cause I'm like, why don't you guys just go retire, go be on a beach, just go have fun? They're like, it's there's no pulse to life. Like it's so fun to build businesses and like make change. And like, yeah, you go sit on a beach for a month and you get it's fun for 2 weeks and then you get really bored because people like us are wired to just build and change and grow and do incredible things. And
business, that's your canvas.
Yeah, it could be through business. It could be through philanthropy. It could be through your children. But there's like people like us don't stop moving. And if we stop, we die, And I was thinking about this, and the advice I give myself right now is so we got a really generous offer to sell my business Fund Launch, a huge, 8-figure offer. We have a broker right now, and we've looked at selling, and it's kind of fun to do the math in your head, like, man, if we sold, I'd have this many tens of millions of dollars in this, and it was like, and then I kept thinking, like, for what though? So what am I going to do for the next 40 years of my career? And maybe it is, let's just finish the money game, and maybe I'll, work on philanthropy or I don't know, whatever other route. But I think for me to say I'm going to just sit on a beach and fly my jet around and just have fun, I think at least the people I've talked to that have done it, it gets pretty old pretty fast, and they love the next challenge. And I truly love the business I'm in for Fund Launch. Like our business. So I love running funds, but Fund Launch. So we have live events. You've been to some of those where we do I thoroughly enjoy working with entrepreneurs. I thoroughly enjoy helping people launch their funds. I thoroughly enjoy, we do big events, being on stage, like speaking. I'm like, if I was to sell this business and build another business, it would be exactly what I have right now.
Yeah.
And I was thinking about that last night, and I was like, you know what? Yeah, it'd be cool to have a big check like at once. But then I was like, and we still make good money. I'm like, I got plenty of money already. I've got, a good family. I got a good life. I got good friends. I'm like, what? I should be very content with what I have, very happy and grateful for what I have. And then also strive for, for more and for greatness and to change the world in other ways and to impact people, my employees. Like, again, if I can mentor and help them. And I kind of had this whole thing. I was actually like last night or 2 nights ago. And I was like, huh. And it was kind of on the thought of enjoy the journey, enjoy where you're at right now. And that sounds so cliche, but I talked to all these old billionaire people, and they're like, they always talk back to like, man, when I was running my business, you can see the light in their eyes. Like, it was so fun. We were flying around, we were doing deals, and it was like, and you can tell they really miss that. And I thought, you know what, if I can maybe I'll slow down just a little bit, take the stress off a little bit, and really enjoy what I'm doing, because it really is incredible and what I get to do every day. And I was thinking about the last couple of days, and I get a mentor, and I got employees that look up to me. I've got investors that I get to serve. I got big stages, and we have a 2,500 person event we're doing in 2 months in May and Miami. Like, I get to go, and I get a chance to be on stage and hopefully impacts 1 or 2 people's lives in that group. Like, what a cool opportunity. And don't waste that for don't sell all that for what, a couple dollar bills, And so anyways, I
There's a
digress. I'm
really good
talking way too
video.
much, but
If you haven't seen it, Russell Brunson put it out, and he is sitting in Tony Robbins' like I guess it's like upper level inner circle,
I've seen the video. It's amazing.
where he
Yeah.
contemplates should he sell ClickFunnels,
Yeah.
and then Tony is like takes him through this mental journey of let's how would that really change how you feel. So if anyone else is out there feeling that as an entrepreneur, business owner, like go find that video, because it might add some extra clarity from where you need to be. Okay. All right. What book or books have greatly influenced your life?
Oh man, I've got a couple. Actually, so I'll say Russell Brunson, dude. The dude's incredible. Go look him up. I'm actually in his Category Kings group. I paid a ton of money to be in that group with him just because I respect him as a mentor so much. And it's his book, Expert Secrets, changed my life. Absolutely changed my life. Incredible book, Expert Secrets. And then that coupled with Launch. If you've heard Launch by Jeff Walker, we launched all Fun Launch, our whole business here. We launched because of those two books. It gives you they're very actionable. They're very roadmap, like do this, do this, do this. Launch is about how to launch your business. Doing the PLF style launch formula, like how you do a pre-launch, how you tease stuff, how you drop certain promos, then how you launch a product, then how you close. He's like, you got to close the cart. Half your sales will happen when you close something out. This is how Apple launches their products, how all these big businesses that launch like a new car or whatever, how they launch. They follow this exact same formula. It's really interesting, worth a listen on marketing. Those two books have changed my life. I've read them multiple times, and I'll just end with those two. There's 100 other books I could go into, but those are the two that come to mind, at least for marketing and like building an online business. Man, those are amazing.
Yeah. Well, Launch is a new one for me. I'm gonna go check that out. In the last 5 years, what new belief, behavior, or habit has most improved your life?
Oh man. So what belief, habit? Oh man, interesting. A few come to mind. I do cold plunges very regular. I have a plunge tank in my basement. I cold plunge every morning right now. Absolutely transformed and changed my life. I hop into, I think it's about 45 to 50 degree water every morning for about 3 minutes. And I breathe really deeply. I'll tell you what, it's hard to be depressed when you do that. It's hard to be low energy when you do that.
You're very in the moment.
Dude, you come out and you're like, let's take on the world, like it's a fun way to wake up. And I make sure I do it, even if I'm tired. Like last night, I went to bed really late last night. And this morning I was like, I have to do it because I need to, like, I gotta show up to Chris's podcast. I gotta be here. I gotta have energy. I gotta and that has changed my life. I've been a lot more spiritual, I would say, the last 5 years. I've really dug into, God. I really try to run a business that God would be proud of if he came and saw my dealings with other men and see what I was doing. And I'm I try to be a better person. And so I'll just say religion and God has been incredible. I've always been religious, but at least specifically the last 5 years has been, I think, really good for me. And it's something that just drives my life and how I see the world and how I look at other individuals. I try to see them in a spiritual eye and see them in a spiritual sense. And I think that sounds really cheesy and cliche and stuff, but that's really transformed my life. So cold plunge and God, there's the answer for you.
And you kind of need God to do the cold plunge. But yeah, no, that shines through when you're on stage and everything you do. So it's definitely very transparent. Last, how can people reach out to you and maybe share a couple moments about big event you got coming up?
Yeah. So if people want to learn about fun, so two things. I run a fund right now. So if you guys want to learn about our fund, it's uglyunicornfund.com. Crypto fund, we're actually doing really well in crypto. It's been awesome. And then we also teach people about funds. So if you want to learn about funds, I've got like a bunch of free stuff for you guys, 100% free. So I've got a free course on funds. It's like 40 videos, totally free. You guys can hop in, learn about funds, just learn, like I mentioned, learning the game. It's totally free course. We've got a free Facebook group, and I put out tons of free content on YouTube, all on funds. Now, the content that we put out is probably 10% of all the content that we make. We have a ton of content, and like we have paid courses, and then we have like our top coaching group, which you're a part of as well. And you've seen that. We have other stuff there. My goal is just, if we can provide enough value for you up front, like, and just teach you a ton, when you're going to launch a fund one day, I hope you remember me and just give me a call and like, Bridger, let's like help me launch my fund, and we'll have lawyers come in and we'll build it up for you. But we also have, so we do live events. We got Fund Launch Live coming up in May in Miami, which is going to be crazy. It's like our biggest event of the year. We have 2,500 fund managers coming together in Miami. We've got Ed Milet coming to speak. He's a top 5 motivational speaker in the world. We've got Jim Rogers, one of the most legendary investors of all time, with the Quantum Fund with George Soros coming to speak as well, and a bunch of other multi-$100 million and billion-dollar fund managers coming to speak in 3 days. Anyways, it's pretty fun. So fundlaunchlive.com, or just all that stuff. If you go to fundlaunch.com, we help you launch your fund, right? So fundlaunch.com, that's the best way to find us.
Love it. Love it. So I went to Fund Launch Live, my first one last year. It was great. The biggest takeaway, because the speakers, the content, that was all great. The networking, phenomenal. At least I'm used to real estate circles. And then when I went to that circle, which I think a large majority of the folks that attended were real estate related, they just think differently. It's on a different level. So that was that was very powerful. So I look forward to it again this year. Already got my tickets. So if you're coming out, say hi.
It's gonna be fun to see you there. I'm excited for it.
All right. Thanks so much, Bridger. Appreciate having you on, and I'll see you here pretty soon. Thanks for tuning in. If you got any value out of this at all, please like, comment, subscribe, follow. I'd love to hear from you. And for more real estate related content, market observations, upcoming events, you can go to investedx.com and subscribe to our weekly newsletter. I promise you won't regret it. Thanks again.